Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I'm going to discuss about bank reconciliation statement. This is the second tutorial under this topic. So if you remember, under the first video, I discussed about the meaning of bank reconciliation and what bank reconciliation statement is. I also discussed about the causes of the disagreement between the cash book and the bank statement, which is the real cause for the presentation of bank reconciliation statement. So in this particular video, which is bank reconciliation statement 2, I will be discussing about the steps, that is the preparation of bank reconciliation statement. What are those steps that will be taken? So how do we prepare bank reconciliation statement? So the first step is to compare the entries in the cash book with the entries in the bank statement. If you remember, I said the real cause of bank reconciliation statement is that when the balance that the business is having in the cash book different from the balance that appear in the bank statement. That's what really brings about the preparation of this statement. So the first step is to compare the entries that we have in the cash book with those entries that appear in the bank statement. For example, let's look at the cash book of Forward Enterprises as contained in the cash book below. If we look at the balance brought down, it is 11,000 naira. Now let's look at the bank statement. By the time the bank present the bank statement showed a credit balance of 1,000 naira. The business is thinking they have 11,000 naira in the bank, but by the time the bank present the bank statement revealed the balance of 1,000 naira. Let's bring the two accounts together. So let's look at it. In the cash book, we have 11,000 naira. In the bank statement, we have 1,000 naira. Just like I said, the first step is to compare the entries in the cash book with the entries in the bank statement. How are we going to do that? That is by looking for those entries that appear in the two sides of the account. So at the end of the day, we will know those entries that actually cause the problem. That is the entry that appear in one account but did not appear in the other account. So how are we going to do this? This is by taking the entry one after the other. Let's look at the first entry on the June 1st. We have balance brought forward, which is 8,000 naira. If we look at the bank statement, we also have the same entry. So we are going to asterisk that. In the cash book, we asterisk 8,000 naira. In the bank statement, we asterisk 8,000 naira. So that showed that the entries appear in the two sides. Such entry will never cause disagreement. If we look at June 2nd, we have electricity in the cash book, which is 2,000 naira. If we look at the bank statement, we also have electricity, which is 2,000 naira. That means we are going to asterisk electricity 2,000 naira in the cash book. We asterisk electricity 2,000 naira in the bank statement. That is how we will continue by identifying each of the entries one after the other. Anyone that appears in the two sides of the account, we will asterisk them. At the end of the day, we will know those ones that actually cause the problem. So after doing that, then the next step is to prepare the adjusted cash book. How are we going to prepare the adjusted cash book? It is by taking the balance in the cash book. If we look at the cash book, we have balance brought down, which is 11,000 naira. We will take that balance as balance brought forward under the adjusted cash book. So just like I said, so we have 11,000 naira. We take that 11,000 naira. Then next step is that we now add all the entries that appear that is not in the cash book but credited to the bank statement. If you remember, we are talking about all those entries that appear under the bank statement, under the credit side, but they are not in the cash book. Let's look at it. Just like I said, when business receives check, we debit the cash book. When such check is presented to the bank will credit the account. So which means we expect all the entries under the debit side of the cash book to appear under the credit side of the bank statement. But this time around, the entries we are talking about that will be added to the balance of 11,000 are those entries that appear under the credit side of the bank statement, but not under the debit side of the cash book. If we look at those entries, let's look at the dividend from Jay's Bank, which is 20,000 naira. If you look at the cash book, there's no entry for that. So entry like that will be added to 11,000 naira, which you have under the adjusted cash book. And if there is any other entries that appear under this credit side of the bank statement but do not appear under the debit side of the cash book, we are going to add all these entries to the balance as per cash book, which is 11,000 naira. So after we do that, then the next step is now to subtract all entries that are not in the cash book but debited to the bank statement. You can see the first one we talk about the credit entries under the bank statement, not in the cash book. This time around, we are talking about debit entries under the bank statement, not in the cash book. Let's look at it under the bank statement. These are the entries we have. We have 2,000 naira, 10,000 naira, 6,000 naira, 2,000 naira. So all these entries are expenses, all the money being withdrawn from business account. And you know, when business issue check, so business are going to credit the account, which means everything that appear under the credit side of the cash book are expected to appear under the debit side of the bank statement. So this time around now, the amount that will be deducted from the balance we are having, as I explained earlier, are all those entries that appear under the debit side of the bank statement but not under the credit side of the cash book. For example, let's look at the standing order, which is 2,000 as we have it under the bank statement here. If we look at the cash book, there's no entry for it. So entries like that and any other entries that appear under the bank statement but not in the cash book, everything will be added and subtracted from the balance we are having in the cash book. And after we do that, we balance the account, and the balance we are going to have is called balance as per adjusted cash book. So what will now be the next step? The next step is now to prepare the bank reconciliation statement by bringing the balance as per the adjusted cash book forward. So if we have the balance as per adjusted cash book under the bank statement, then the next step is to add unpresented check. That is, what do we call unpresented check? In the first video, I explained this thing in details. You can check it out for more understanding about what unpresented check is. So just like I explained earlier, we have a cash book, we have a bank statement. So this time around, anytime business issue check, either to supplier or they issue check to purchase an item, it means those persons will present those checks to the bank for payment. So any check that is presented for payment after bank statement has been prepared is regarded as unpresented check. That is, the check has not been presented as at the time the bank prepared the bank statement, which means those checks will not appear in the bank statement. So in this case, we are talking about all those entries under the credit side of the cash book but not under the debit side of the bank statement. Just like I said, any entry under the debit side of the credit side of the cash book are expected to appear under the debit side of the bank statement. So for example, now Anthony, which is 8,000, if we look at all the entries we have under the debit side of the bank statement, there's nothing like Anthony there. So Anthony, a check given to Anthony as an example is an unpresented check. If there is any other check, just like Ahmed, 10,000, there's no entry for that. That is also called unpresented check. So if there's any other unpresented check like this, everything will be added to balance as per adjusted cash book. Then the next step is now to subtract uncredited check. If you are talking about uncredited check, we are talking about all those checks that the business received but present to the bank after the bank statement has been prepared. That is, all those checks that appear under the debit side of the cash book, that is, the business received the check but does not appear under the credit side of the bank statement. We call them uncredited check. Just like I said, in the cash book, all those entries at the debit side are expected to appear under the credit side of the bank statement. So any entries that appear under the debit side of the cash book, for example, Latif 25,000, there's nothing like Latif 25,000 under the credit side of the bank statement. So such a check is called uncredited check. So Latif, and if there's another one just like Jude, they are both uncredited checks. So checks like that will be added together and deducted from the balance we are having. So that is going to give us balance as per bank statement, which means the figure we are going to have must be equal to the balance we have under the bank statement, which is 1,000 naira. Thank you very much for watching this video. Don't forget to subscribe to the channel, like the video, and share it with others. You can also follow us on Facebook by searching for Simplification of Financial Accounting Tutorial SOFA, or you visit my blog at sofaaccountingtutorial.blogspot.com. So in my next video, I will be treating the illustration I cited under this video proper. I will be showing you how to prepare the adjusted cash book and the bank reconciliation statement. So thank you very much for watching this video. Just like I said, this is the cash book of Hardware Enterprises. This is the bank statement of Hardware Enterprises. The cash book showed a balance of 11,000 naira, while the bank statement showed a balance of 1,000 naira. So I'm going to prepare the adjusted cash book for this account. I'm going to prepare the bank reconciliation statement for the account. So thank you very much.